Hello and welcome from me, John Denton, the DNA of Business, where we help business owners get their businesses ready for sale. Recently, I was fortunate to be invited to do a webinar for the Wanneroo Business Association, and I'm going to show you that now on the topic of the key steps to turn your business into a saleable asset. So making this one-day workshop into a one-hour webinar was a bit of a challenge, but with the aid of mind maps, I think it worked pretty well. And I hope you enjoyed. If you'd like any more information or like to have a chat about your business, then give me a call. You can contact me through johndenton.com.au.
Hello everyone, it's great to see you all logging in for today's session with John Denton, where we're going to be learning about how to turn your business into a saleable asset. So John is a big WBA supporter, he's a past president of the organisation and he's a wealth of knowledge, so we're looking forward to hearing from him today. For those of you that have already logged in, there's a few features of the platform I wanted to let you know about that you'll be able to use throughout the session. First of all, there's the chat option. So if you click chat at the bottom, you'll get a little chat box where you'll be able to say hi to everyone else that's watching because you can't see them. You can only see myself and John. And the other option for you to use today is the Q&A button at the bottom. So if you click on that, you'll be able to post any questions in there that you come across as John talks. If they're relevant to the section that he's talking about, I'll jump in and we'll ask those to John. Otherwise, we'll go through those at the end. So make yourselves comfortable and we'll hand over to John so he can get started.
Okay. Hi, Lauren, and hi to everybody. So why am I talking about this topic today? I originally trained as an electrical and electronic engineer many years ago. And having an engineering mind, it made me very logical and very analytical. I then progressed into sales when I found out how much salespeople were making money-wise, when they knew very little about the product or service. And it was a big learning experience when I did that. Long story short, I progressed to the point of starting up my own business. I had a training business that I started up back in 1997. And the idea was to build a business and sell it. But a couple of things happened. One, I fell in love with the business, and two, it really wasn't, couldn't get it into a state where it would really be saleable. Took on a business partner, got some good advice, and then set about making the business saleable. And some of that information I'm going to share with you today. The thing about businesses is that a business should be a saleable asset. Let me just share my PowerPoint screen with you. So a business really should be a money-making machine. Over the last 12 or so years, I've been a broker, and mostly I've been doing it part-time because I really enjoy working with the business owners, getting their businesses for sale first. And when I started broking, a lot of the businesses that I went to look at weren't actually saleable. They needed work doing on them. So I was then giving them advice and helping them to turn it into something that was saleable. And then they were deciding not to sell it because a business that's ready for sale is well worth keeping. So what are some of the reasons that businesses sell? And again, you can type this into the chat box and see what your ideas are. Businesses either sell reactively or they sell proactively. And obviously, it's better for the business owner if the business sells proactively. In other words, the business sells when you decide you want to sell it. And you can, if you're prepared for it, you can get the best price for it and sell on your terms. When a business sells reactively, in other words, the business owner has to sell, then it's not generally the best position to be in and not where you're going to get the best price. So a business that's ready for sale is well worth keeping. Some of the reasons businesses sell proactively, and this is what's come about over the years of working with business owners and selling businesses. Sometimes, and hopefully, it's to cash out and enjoy the fruits of their labour. That's obviously the best outcome. Sometimes it's for retirement, to buy another business. I mean, you can read all of these. I don't need to go through them. But that's the best way that a business can sell. Sometimes a business has to sell reactively, and that can be because the business is in decline, a key person's left the business, ill health. Again, you can read those, but you don't want to be in that situation. You're not going to get the best price and have the best outcome probably in that situation. And then why do people buy a business? Because they're tired of working for a boss. So they decide to work for themselves, want control of their destiny, to get rich, make money, or lifestyle. And quite often, for all kinds of reasons, they don't necessarily achieve what they set out to achieve. So I'm going to give you a golden nugget now. So this golden nugget, I've run mentoring groups of business owners and have for about 12 years now. And one of the things that a lot of them get out of it is just, not just, but this one distinction makes a whole difference to how they look at their business and what they're doing. And that is, do you have a business or a practice? And I get phone calls from time to time from people saying, oh, I'd like you to help me sell my business. And I say, what's your business? Oh, I'm a chiropractor. Okay. So in your business, who does the whacking and cracking? In other words, who does the chiropractic? Well, I do. Okay, so who else is there in the business? Oh, there's the receptionist, admin person, and, well, the office cat, maybe. Okay, then I'm sorry, but you don't have a business, you have a practice. And this is a really important distinction to learn. Are you in a business or are you in a practice? And the primary difference, I've got a whole lot of different things here, but the thing that I want you to take away from this is that a business is run on systems and a practice is based around an expert. And take the expert out of the business and there's nothing left, there's no value. So, whereas a business runs on systems, so you can take the owner out. It has value without the founder or the business owner being there. And that is probably the number one difference. Just moving on, a practice cannot be sold as a going concern. A practice can be sold, but it has to be sold to another practitioner. So if you're a chiropractor and you're selling your practice, then basically the only thing you've got to sell is your client base, and you're reliant then upon finding another practitioner to come in and buy your client base. So the training business that I had for 10 years and sold in 2006, all that we had to sell, say all, what we had to sell was the database and the IP. The IP was part of a franchise anyway, the training programs. So what we had built up was the database and the client base and the ongoing clients. And that's where the value was. So the whole business that we had to sell was basically goodwill. And I'll talk a little bit more about that shortly. There's nothing wrong with a practice, and I put trades into the same category as a practice. If you're a tradesperson and you're a brilliant cabinet maker, say, then if you're doing all the work, then you're really in a practice. And a practice can be turned into a business, and it can be sold as a going concern as a business. But again, it's a conscious decision that that's what you want to do. And we'll talk a bit more about that later as well. Whereas a business can be more expensive to start up because you generally have to have premises, you have to have a commercial lease, maybe plant and equipment, staff. There's so it's a whole lot more expensive in starting up a business typically. I mean, if you're starting a practice as a radiologist or something like that, you've only got a few $1 million worth of equipment to buy for your practice, but you understand what I mean. And this business practice trade thing I've adapted from a book called Sell Your Thoughts by Matt Church, which is a really good book to read if you're a practitioner. So what is a business? A business is a commercial, profitable enterprise that runs successfully without that owner having to be there. And that's the key. So I go back to the question that I asked at the beginning. Do you have a business or a practice, trade, or even a hobby? And there's nothing wrong with any of them at all, as long as you know what you have and you plan accordingly and you've got the end in mind and you know where you're going with it. I've worked with a lady who started out as a practitioner in her business. It was a therapy business and she was the therapist. She was doing the treatments. But over a period of time, she took other therapists on, opened up other clinics, and ended up, the last time I spoke to her, with several clinics around Perth, and she spent not very much time in the business. So it's fine as long as you know what you're doing. So what's the first step, the first thing in turning your business into a saleable asset? And it's planning and preparing, not sticking your head in the sand or thinking everything will work out fine. And when I reach a certain age, I'll phone up a broker and say, I want to sell my business. Because quite often the broker, if he's being honest, will let you know that you're not going to get the best price for it, or it's going to be difficult to sell unless it's been very well prepared beforehand. So, you know, some of the business owners I talk to, I say, what's your plan for your business? Oh, well, I hope to sell it one day. Well, my message to that is, sorry, but hope is not a good business strategy. So to make that point, I love this quote from Alice in Wonderland. Would you tell me, please, which way I ought to go from here? Said Alice. Well, that depends a good deal on where you want to get to, replied the cat. Oh, I don't much care where, said Alice. Then it doesn't matter which way you go, said the cat. Well, so long as I get somewhere, Alice added as an explanation. Oh, you're sure to do that, said the cat, if only you walk long enough. I love that quote, and I think if you turn the word walk into work, then that's quite often the case with a lot of business owners. They are going to get somewhere with their business if they work long enough and hard enough, and quite often they have to work very hard. But if they don't know where they're going, then the next quote comes into play as well. You know, if we do not change direction, then we're liable to end up where we're headed. So think about it. If we do not change direction, we are liable to end up where we are headed. And that's from a book called Coaching for Performance by John Whitmore. And this is why business owners, it pays to get somebody from the outside to have a look at your business and work out what you're doing and where you're going. Because I'm told by people who know these things that fish, for example, can't see water. And quite often a business owner in their business is a bit like fish in water. They've been in the business for so long, they maybe started it up themselves, but they can't see where they're going. They've lost sight of where they're headed, or they can't see that the business is going off in the wrong direction. Somebody external coming in and asking the tough questions and looking at it from the outside can quite often see something different and get the business owner headed back on track. So the message is plan and prepare. The 7 Ps. Prior preparation and planning prevents pretty poor performance. All right. Now, you may not be selling your business. You may not be thinking about it right now. You're going to exit at some point. There will be a trigger at some time. So think of the 7 Ps. Know where you are now. That's where an external person can help. Where you're going and how you're going to get there. And begin at least 3 years out, because clarity leads to power. Now I'm going to switch from this PowerPoint to something a bit different. And this is one of the tools that I use when I'm working with clients. So I'm just pressing buttons here to switch screens. So now you should be able to see my mind map. So I'm just checking on questions at this point. If anyone has any questions, just please type away. Otherwise, let's go to the PowerPoint. So
there is a quick one there, John, from Troy.
Yep, sure.
Who's asking, how does the get your business ready for sale process differ from standard business models and new models such as the peer-to-peer model, if at all?
I'm sorry, I don't really understand the question. Can you
So I
repeat
think
that,
he's
Mark?
saying the process that you take your business through to get it ready for sale, how would that be different to a business model that a business might adopt to run their business?
The important thing is to have a business model. And I'll talk a bit more about that when we get a bit further down the track.
Okay.
All the elements that come into a business. I can't see the chat box, by the way, just so I'm relying on you, Lauren, too.
Okay, that's all right. There's a couple, there was a few people said exiting to retire. Sean King, I need an exit plan to sell when I want to retire in a few years. And Troy was just asking the question about the business model, but maybe at the end, Troy, if you've still got questions, let us know and we'll revisit that at the end. Yeah.
Once I get out of screen sharing, I'll be able to see the questions.
No worries, John. I'll keep an eye on it for you.
All right, thank you. So moving on. So the first thing is in planning and preparing is, and this is the biggest impediment to a business sale, is getting the business owner out of the business, or getting the business to a point where it's not dependent upon the owner. And this can be quite a challenge, and it's quite a challenge for people like myself working with business owners to try and separate them from the business. Because if you remember, a business runs on systems, not around an expert or around a person. So whoever's coming into the business and taking over that business needs to be able to do what the current business owner does. So how do you go about getting a business owner out of the business? Well, you need documented systems. But first of all, you need systems. And that's really, really key. They need to be good systems. They need to be tested, working, documented. What areas do you put systems in? Well, all areas of the business. So lead and sales generation, marketing systems, customer service, client retention, operational systems, financial systems. They all need to be in place and running. I use the metaphor of a Swiss watch. When I was a manager of a business prior to starting my own business, my mantra for the team was always, this business needs to run like a Swiss watch. And if one person's not there, then other people can fill in and everything just ticks over as normal. And those systems need to be documented, and there are some really, really good apps that you can use for documenting systems and running systems these days, which enable the next step here is delegate effectively. You know, this is something else that business owners quite often find really difficult. It's being able to delegate. On how many times I hear people say, yeah, but they couldn't do it as well as me. You know, and quite often other people can do it even better than you sometimes, providing you delegate correctly in the proper manner, and you train people. So you've got to train them, you've got to delegate effectively, give them the tools, give them the responsibility as well that goes with it, and let them make decisions. But there's a whole art around delegating, and that might be to your own team, or it could be to an outsourced team. And again, with these documented systems and with some of the applications and tools available these days, it makes it a lot easier to delegate and follow what people are doing and see that they're doing the right thing, and coach them and train them to get things done so that you're not having to do it all yourself. That's where the practice and the practitioner is a different situation. You've obviously got to get other practitioners into your business as part of your team to do some of the work. Automate your business. Again, there's a lot of applications around these days that you can use to automate things within your business. Most of you, I'm sure, would be familiar with things like Xero and the accounting packages that are in the cloud now. And there's a lot of automation that can go on around that with tools like Zapier. I don't want to get into too much detail here as well, but you can connect applications together so that things automate, and you're not double handling or wasting time doing things that can be done automatically. Employ or contract staff, train staff, contractors. Training's key. And don't keep specialist knowledge in your head. So this is another one for business owners. You know, and sometimes business owners take pride in the fact that they are the expert, they're the knowledgeable person, they've got the skills. But if you ever want to get out of the business at a good price and without any hassle, then you need to, get that knowledge out of your head and get it into somebody else's head, but get it down on paper as well. I sold a business many years ago, and it was fantastic to see the systems that they had in place, even to the point where, and I don't know if you all know this, but on Microsoft Explore in your filing, you can actually color code the little folders. They don't have to be yellow. There are tools out there you can use to color code them. And when I had a look at this business, they had a filing cabinet with files in, and they were colored and color coded. And on their computer, they had their files in Explore color coded the same way. So I think it was blue for admin and finance. You went to the filing cabinet, there were files there that were blue that were finance and admin. They had HR was pink, I think, and they were the same in the filing cabinet. But it made it such a beautiful business to show a prospective buyer around. They could see immediately how easily they could run the business and find things and do things. So document things and get all that stuff out of your head. So it's all about getting the business not dependent upon the owner. So that's a key one. I put it number one. It's also one of the hardest ones. So let's have a look at the next step, or the next area to work on. As a business owner, you should know and have some idea of what your business is worth and what makes it valuable and what makes it saleable, so that you can be continuously working towards having it ready for sale. And then when the day comes that you want to exit, then you'll get the best price for it. It will sell easily, and there won't be any repercussions or problems afterwards. So you need to be working on it and having this in mind all the time while you're building your business. And the other thing about that as well is that, of course, it makes it a really, really good business that runs without you having to be there, and you can have holidays, and it gives you options. And the other thing is that you can sell it many times. You can franchise it. So if you haven't read the book, The E-Myth Revisited by Michael Gerber, then go out and get the book or get the audio book and listen to that. It's absolutely brilliant. It should be compulsory reading for every business owner. But let's look at what's a business worth and what makes it valuable. Well, first of all, we're talking about selling going concerns here. And I'm talking about selling the assets of a business into another entity. So if Lauren was buying a business, I have a practice at the moment, but if I had a business, let's say I had a soft drinks business with a whole lot of machinery making soft drink, that would be part of a legal entity, possibly a proprietary limited company. So if Lauren wanted to buy the business, she would set up her proprietary limited company, her legal entity, and we would, on purchase, we would transfer the assets across to Lauren's entity. So, and the assets are the plant and equipment, stock, and goodwill. The alternative is that Lauren buys the shares of my proprietary limited company, if that's what I've got, or my entity. But that generally doesn't happen because of risk factors and liabilities and things like that in smaller business sales. Having said that, going forward, and particularly with what the virus has done to, or will do to business sales and values, and with the banks not wanting to lend money, then there's going to be more share type sales. If you go to my website, johndenton.com, and go to resources videos, there's an interview I did there with Chris Milne, business valuer in town, where we talked about some of these things and what's going to change now as a result of this pandemic when it comes to selling businesses. But just let me explain a little bit more. I want to spend a little bit of time on this because people do have some interesting ideas sometimes about how a business is valued. So I'm going to change back to the PowerPoint and just explain this a bit further. So the assets come as plant and equipment. Obviously, that's machinery, equipment in the business has a value. There's a number of different ways that you can value plant and equipment as well. That's a topic all in its own. There's stock. Any stock value has to be reusable stock. And then there's this goodwill thing, which South Africans, when they used to come and see me as a business broker to buy a business, would not pay money for goodwill. They would say things like, I'm not prepared to pay for fresh air. They were only interested in the tangible stuff. So how do we work out the value of a business? Say I quite often spend an hour or two in workshops talking about this, but I'm going to go through it quickly. You can always contact me afterwards to talk about it in more detail. So it starts with working out what is the maintainable adjusted net profit for the business. That's GSP, stands for gross selling price, by the way. Don't worry about this formula here. I'll explain that in a moment. So work out what the maintainable adjustable net profit is. What do we mean by that? Well, it's the profit per the financial accounts that the accountant has sent off to the tax office, the P&Ls, with add backs. So accountants talk about EBITDA, earnings before interest, tax, depreciation, amortization. In the broking world, we talk about adjusted maintainable net profit. It's what's the net profit to the owner before the owner takes any discretionary stuff out of it. You know, before he takes out the cost of his Maserati and his holidays overseas and all that sort of stuff. But discretionary things. We add those back to the financial accounts. We undo some of the things that the accountant's done to minimize the business owner's tax adjustments. So if there are one-off bluebird hits in there that businesses have, so as I say, there's a whole workshop on this part on its own. And we look at the average of the last 3 financial years. And then we apply this magic thing here called an ROI percentage, which a lot of accountants and other people call multipliers. It's really a return on investment. If someone buys my business, how long is it going to take them? What's the return on investment going to be? How long is it going to take them to get the money back that they paid for the business? And it all depends upon the risk to the ongoing adjusted net profit that we just worked out. The higher the risk, then the lower the ROI factor for the seller. So if it's a retail business, you're going to have a pretty low, let's call it multiplier, on the net profit, because the risk is very high, perceived to be high. And that gives us the gross selling price. And then this hopefully will explain it all in a lot better terms. Let's assume that the net profit, when we've adjusted it, ongoing, and we think that's a maintainable net profit going forward of 200,000. We've worked out through our research of similar businesses that have sold and what the market's doing. An ROI of 40%, which if you want that as a multiplier, that's 2.5 times. Then it means the buyer is going to get 40% return per annum. So 2.5 time multiplier. Then the gross selling price would be 500,000. If the stock value, saleable stock, is 90,000, if the plant and equipment has been valued at 70,000, and as I say, that there are different ways to value that, but let's say it's 70,000, then we can work out what the goodwill component is. So we take the gross selling price, the 500,000, take off the stock value, take off the plant and equipment value, and what's left, the 340,000, is the goodwill. Now, this comes into play when buyers are trying to get a loan from the bank, because if the goodwill component is very high, the banks are very reluctant to lend against goodwill, because if the business goes down the drain, they've got nothing to sell to get their money back that they've loaned. So banks do not like to lend against goodwill. And this is where, the plant and equipment value comes into play a bit, but that's a whole different story. If we were presenting this business for sale, then we would take the stock value off the gross selling price, and we would advertise it as 410 plus stock at value, because obviously the stock will vary with time. So other approaches, market value, sometimes a multiple of turnover, still used for some professional service practices, financial planners and mortgage
John,
brokers.
if that's all right.
Yeah.
Just had a quick question on the other slide. Stephen Anthony's asked, do you also use the net discounted cash flow method?
Discounted
cash flow method?
Not aware of that one, or I know it by a different term maybe. So can I come back to that?
Yeah, sure.
Another way is, and this is not used much these days, asset value as a going concern and add a goodwill figure. There's a danger with some of these methods that a business can be overcapitalized. So I did an appraisal on a business in Malaga some years back that had a lot of equipment manufacturing a food product. And the owners were fairly elderly. They only wanted to work 3.5 days a week. And so they didn't build the business up too much, but then they wanted to sell. The profit in the business was enough for them to have their lifestyle that they wanted. But had the business been running 5 days a week or 2 shifts 5 days a week, the profit could have been way higher. And then the selling price would have been higher. As it was, with the net profit that it was making, the net profit and the valuation didn't even get it above the value of the plant and equipment. It was overcapitalized. And that plant and equipment was pretty specialized and would only be of any value to someone in a similar business buying that business. So you've got to be careful with some of these things. As I say, there's an interview on my website, johndenton.com.au with Chris Milne, business valuer in town. He's also the publisher of the Business Values newsletter, which is a quarterly newsletter that covers a whole lot of things about business values and sales. Really, really good publication. If you watch that interview, we talk about what's going to happen with business values going forward now as a result of the pandemic. So what can we do to increase the value? So I'm going to go through being conscious of the time, the rest of this relatively quickly. So we go back to the mind map. I love mind maps. I use them for lots and lots of things, particularly with clients. So increase the value. Well, we said the value is based on the net profit. So what can we do to improve the net profit? Don't focus on turnover. It's all about leftover. In other words, it's all about the profit, not the turnover. There's no point increasing the turnover if you're not increasing the profit. And again, I could tell some stories about businesses I've valued there where they increased the turnover but let the gross profit drop by discounting. And at the end of the day, they were doing a whole lot more work for no more profit. Don't take cash out of the business. It's illegal. It reduces the profit and the value. There's no proof of cash anyway, and I, for one, won't deal with you. Business comes down to maths and psychology. Again, I'll just show you this to make a point very quickly. You can get a copy of this mind map, by the way. If you email me or contact me through the website, I'll send you a copy of this mind map printed, which you can print out. So a business, putting it in very simple terms, two things: get the math right, that's the numbers, know the numbers, make a profit, and the psychology, that's the marketing and sales. Get those two things right, then you've got a good business. I love these little diagrams because they stick in people's minds and you remember it. If you get the math wrong and the psychology wrong, you won't have a business. If you get the math right but the psychology wrong, then you go out of business slowly because you're making a profit but you're not selling enough. If you get the math wrong but the psychology right, you go out of business quickly because you're selling a lot but you're not making any profit and you can't sustain that. If you get the math right and the psychology right, then you've got a successful business. So the next thing is about knowing the numbers in the business so that you know where you stand on this. So, yeah, sorry, I'm going to continue with that. Just bear with me. So know the numbers, the profit drivers, and this is in every business book, particularly for small businesses that I can think of. You know, and this is an example. There's lots and lots of different numbers and areas of the business where you need to know your numbers. But how many leads and inquiries are you getting coming in? Are you measuring the inquiries? Do you know where they're coming from? How many of them are qualified prospects predisposed to buy? And that depends upon your marketing and getting your marketing to filter the leads that are coming in to qualified prospects predisposed to buy. Again, you can automate a lot of this. What's your conversion rate out of those inquiries you get coming in? How many of them convert to customers and clients? What's the average dollar spend, particularly on the first spend, and how many transactions a year, assuming it's a repeat business? And again, this really just depends upon the business. As accountants and lawyers say, this is general information and you should contact your own accountant or lawyer to get the real stuff. But you understand what I mean. So I'm just showing this as an example. So how many transactions per year? That will give you your annual sales revenue. Then depending on the gross profit, that's the profit on your service or product after you take off the direct cost of goods sold. And then that will give you your annual gross profit dollars, which pays for everything else. pays your expenses, pays your rent, pays your salary, your income. So you've got to know your numbers. What are the numbers you should measure in the business? What are your key performance indicators? All of those things that we've just talked about. Retention of customers, gross profit by product, expenses. You can't improve what you can't measure. So know your numbers will tell you which levers to pull in the business. Are there enough leads? What opportunities are there for an upsell, cross-sell, and so on? This is all business coaching 101. Use a what-if spreadsheet. That's what turned our training business around and enabled us to increase the profits significantly in the business. So let me just go back to the mind map here. I'm really testing the technology and me as well. Okay, so there's a few things to do there with increasing the net profit. Let's go over here and we'll get through some of these. The financials. By now you should understand how important the financials are, because it's all based around the profit. So don't take cash out of the business. I'll put that in there again. Keep all records up to date. There's no excuse these days with apps and technology not to have your records up to the minute if necessary, and some businesses do that. Make sure everything is good and clean. Don't put a lot of personal stuff or dodgy stuff in the financials, because it'll kill a sale. It'll get found out. Do your financial statements agree with tax returns? Make sure that that all lines up. Keep discretionary stuff to a minimum, or at least document it separately so that it can be seen on the accounts. You know, the accounts need to be understandable for someone wanting to buy into the business, and structure the accounts to drive your business. So I don't know if we have any accountants on this webinar, but, you know, accountants sometimes will set up your, if they're setting up your Xero or MyOb or your account structure, your chart of accounts, they'll set it up to suit them and what they've got to tell the tax office. What you as a business owner need to do is set it up and get help and advice on this so that it's telling you key things in the business and what's happening, because that then leads to a dashboard, which leads to you having a good handle on everything that's going on in the business and where you can make strategic changes and things like that. And history can't be changed. So, as I said before, you need 3 years of good, clean financials for your business. So start now, and we're coming up to the end of the financial year. This is the perfect time to review your chart of accounts and your financials and change things from July 1 to start, you know, with how you mean to go on. So I can't emphasize that enough, because some of the financials we get to see in the business broken world, yeah, it's just horrible anyway. And avoid sudden large changes prior to a sale as well, because it raises suspicions and it just won't be believed. So that's the financials. And I say there's enough tools and things around these days that there's no excuse really. As I say, you can get a copy of this mind map if you email me, john@johndenton.com.au, or use the contact form on the website. Now, you as an owner, this is now for people who are looking to sell. Are you ready to sell? So a lack of personal preparation can be a real challenge. And what are you going to do after the sale? So have you thought about what you're going to go to? Is it, again, it depends upon your reason for selling. Is it to buy another business, go into another venture? Is it to retire? Yeah, just be very, very clear on what you're going to do. I've seen sales fall through because at the last minute, the seller could not let go of their business because they didn't know what else they were going to do. It had been their whole life. They'd started the business. So yeah, know what you're going to do after the sale. Avoid having to sell, obviously. We talked about that. And think about a handover period or an earnout, again, because of the economic situation that we're getting into, and with banks being reluctant to lend money, then there's going to be a lot less all-out purchases of businesses. People are going to buy into a business or buy part of a business or come in as a partner or some other arrangement and then take over the business over a period of time when they've convinced themselves that the business is good. And it's like a vendor finance type arrangement, buy the business off the owner over a period of time. That's going to be more common. Again, you can watch the Chris Milne interview on my website for more on that. You're tired of the business, and I put in there, it's funny, when I start working with people and getting their businesses ready for sale and life becomes a bit easier and systems make the owner's life a bit easier and the business becomes more profitable, the owner suddenly becomes more revitalized and doesn't want to sell. I've had that happen to me as well over the time, which is why I do more of the coaching than the selling now. Because I've lost sales, I had sellers pull out of sales because the business, we've spruced the business up, they didn't want to sell it anymore. Don't go to the market too soon. This is all fairly obvious sort of stuff. So getting personally prepared and having all these things in place is important as well. And finally, the business. You know, the business needs to be well prepared. I've seen some businesses that just, I was reluctant to go into some of them because they were so poorly presented and set up. And that's because, again, it's like the fish in water. You know, fish can't see water. The business owner doesn't always see a business how an external person or a prospective buyer will see the business. So the presentation of the business itself, the legal structure, make sure business names are registered. Now, trading names are going to disappear. They should have disappeared a year ago, but ASIC changed that, or the government changed that and put another extension onto businesses being able to convert their trading names into a registered business name. So make sure you've got a registered business name. Leases, again, you know, how much time is there left in the lease? Is it going to be transferable to a new owner? What are the renewal options and things like that? Because that can affect things quite dramatically. If it's a freehold property and you're the owner and you own the freehold as well, are you selling the freehold with the business, or are you just going to draw up a lease and lease it out? A business I sold, again, in Malaga in 2018, and the business owner, he came and did my half-day workshop in 2012 on getting a business ready for sale. He came back and did it in 2015, again, having moved and bought his own premises and made quite a lot of changes. And after that second workshop, he asked me to come in and work in the business and help him sell it. And by then he owned the property, the freehold. So he's now sitting back, retired, after a $1.2 million sale, collecting rent for the business.
Sounds pretty good. Just a quick question there
Yeah,
from
sure.
Troy asking what freehold means.
What freehold is, well, you own the land and the building, so the premises. So in this case, it was a warehouse cum factory that the owner owned, was paying himself rent out of the business into his super fund. So when the business, he sold the business but kept the freehold, kept the property and the premises.
Perfect. Thanks, John.
So now he's sitting back and taking a nice rent. Plant and equipment stock, make sure the stock's saleable. Again, I've looked at some businesses where there's been an enormous amount of unsaleable stock. It's worthless, you know, so clean up your stock. Oh, and do stock takes. Please do stock takes on a regular basis so that you know what level the stock's at. try and keep it so that it's not fluctuating up and down. People manipulate stock sometimes to change the value of the business and everything else, and it generally gets found out and can kill a sale. Client base profile, just quickly, you want a good spread of clients. Again, it comes down to that multiplier of the adjusted net profit and the risk to that profit. If any client is more than 15% of turnover / profit, then that's a risk to the business. It starts to devalue the business. And if you've only got 1 or 2 big clients, then that is a real risk. Yeah, so I could give you some examples of that, but I won't. But yeah, so all these things need to be in place. If you look at a business, I'm just going to switch to a different mind map here. So again, this is something I use as a model with clients. You know, these are all the different elements that you need to get going in a business. And again, this is a generalization, and I tailor this for a business when I'm working with them over a period of time. And it's a traffic light system. You know, the green areas of things that we decide are working really well. The amber ones are things that are okay, but could be improved. And the red ones identify areas where it needs some work. So in this case, long-term goals. This is, again, just an example. So, you know, it's about getting all these things working well so that the whole DNA of the business is, I'm just switching screens again here. So hopefully you'll see this in a moment. So, you know, all elements of the business, all the DNA in the business needs to be working well, working together. And P stands for production and service. So this is your product and service delivery, admin and systems. This is the IR, the people part of the business. You need a good team, all working well. They need to be led and managed. Entrepreneur, you need creativity in the business to stay ahead of the competition. And you need good sales and marketing to get your product out there or your service out there. And these all need to be working for the business to work really well and to sell really well. And again, I emphasize, have an instrument panel. If you can't measure it, then you can't improve it. And just finalizing this, and then we'll open it up for questions. Some tips: know your numbers, systems and checklists, develop actions and succession plan. Again, if you want a copy of the PowerPoint, then let me know. I can let you have a PDF copy of that. What next? I run business owner mentoring groups on a monthly basis, and there are some members on this webinar, I know. Troy being one who's asking the questions. Thank you, Troy. Private client coaching, so I do one-on-one work with clients. Help clients, business owners sell privately. You don't have to go through a broker. You can sell it yourself, but you need to know what you're doing. There are some traps, and coming soon, I'm going to put a whole training course on this online, and I've got a whole lot of material ready to go to set up a podcast. If anybody on the webinar would like a 45-minute consultation or a chat, just an informal chat about your business, then again, contact me through the website, and there are some of my other contact details there. So Lauren, any questions?
There's none come through so far. So if you've got any questions before we finish up, submit them through. But I just wanted to add to that, maybe it's not even yourselves, it could be customers or friends or family members that you know might be struggling with. They've set up an established business, it's going well, or they've been in it a number of years, they might be losing a bit of passion in it, they might be looking forward to working towards retirement, but they're not sure what that looks like. Quite often you might need a helping hand, or just someone to have a coffee with or a conversation, or you might need more of a hands-on help throughout the whole process. So feel free to reach out to John for that reason. But he's also got his mentoring groups to help you work on your businesses for the moment and set yourselves up for that future point whenever it drops. So We have had questions coming throughout. I think if Stephen, Troy, and forgive me, but whoever else it was that asked questions throughout the session that weren't answered, please let us know or reach out to John, and you can have more of a one-on-one catch up. So question come through, best tip for those starting a business right now?
So yeah, it's
Can you see that one, John? The best tip for people starting a business right now.
oh, sorry, yeah, no, I didn't see that for some reason. The best tip for someone starting a business right now is think about the economy, what's happening in the economy. Have a look at that video, the Chris Milne video, because he's talking about which businesses are going to go well, in his opinion, when we come out of whatever coming out of this situation means. But always, when starting a business, begin with the end in mind. Think about what the business is going to look like when it's finished. So if my business is perfect and I'm 5 years down the track or 3 years down the track, what's it going to look like? What will it be doing? And what will my role in that business be? And start planning that now. And then, yeah, you know, I get people to plan in monthly, 3-monthly blocks, but you need to have a vision of where you're going. And the other thing I say to people starting a business, make sure that you've done your research and you know there is a market for your business.
And is these the types of things that you continue to keep the business owners that are in your mentoring groups on track for? Because we all know it can be hard, especially if it's a smaller business, you're just starting out, you're involved in every aspect of getting the business off the ground, getting it going, getting customers, putting your systems in place, doing everything, wearing all the hats. Is that what you do in the groups to keep them with their eyes on that end goal?
That I try. Yeah, that's the thing, is to keep them focused on the end in mind. But the great thing about the group, and the reason I do group mentoring as well as the one-on-one, and the groups have been running for now like 12 years since I started them, is that everybody shares ideas. People are there to work with each other and help each other. There's no competing businesses in a group, and people do that. They give each other tips. We all learn from each other because we've all got different experiences, different skill sets. And that sharing and connections is just fantastic. Some of the people have been in the group over 10 years.
Wow, that's a credit to yourself as well. You're obviously getting a lot of benefit out of it. I think people have thrown their questions out there as you've been talking, John, so we'll leave it there. So just wanted to thank everyone for logging into Wanneroo Business Association's webinar today with John Denton. And again, I just encourage people to reach out. If you need John's contact details, let us know. And we'll be back tomorrow afternoon. We've got our business coffee catch up, and then on Friday we're doing our virtual business pitching. So thank you for your time, John, preparing the presentation, and thank you for your comments coming through, thanking John for his time today as well. So for our members, the session will be available in the Facebook group for you to catch up on, but we'll leave it there. Thank you, John, again for your time.
All right, thanks, Lauren, and thanks for the opportunity.
You're welcome. Thanks, bye.